Hello, everyone. Happy New Year. This is Drew from Best of Us Investors, working with Mark on the Platinum Trading platform. So, again, Mark has been investing for over 40 years now and has worked as a director of operation on an online firm for about 10 years. Now, he will be doing overviews on what he saw in the market in charts from the previous week regarding the swing trades, and also sharing some thoughts on the stocks that he is keeping an eye on the upcoming week. So for real-time buy sell signal notifications based on more than 7 indicators and insights on stocks that are setting up for great trades each day, along with educational videos on how to read charts, come join our Platinum group and let's get through this tough market together, seeking for great swing trade opportunities and even for great potential entry points for long-term investments as well. So make sure you check the link in the description below for the Platinum membership. And I just wanted to remind you that these videos are not made for financial advice, but for educational purposes only. So, Mark, how did you see the market the first week of 2023?
Well, I see them exactly the same way that we left 2022. We're continually on the major markets like the S&P 500, just moving sideways, not going up, not going down. Basically, we have daily fluctuations, and it's basically the market's just trying to find, legs on which way to go based on if the Fed's going to raise rates, if the Fed isn't going to raise rates, if they're going to taper, whatever. It just seems like we go from report to report. This week we had a lot of jobs reports, and the market went down. And then today is Friday, as we were filming this, the December jobs reports came out, and now we're up, 600 points on the Dow. But we're still trading within the same trading range. We haven't really popped up or down. So at some point, it's like a spring coiling up, and we're either going to go up or down. But there's a lot of resistance on the top part of the charts, and just one resistance line on the bottom side. So it's a tough market. December was tough. The last 2 weeks, of course, we had holidays with short weeks, less volume trading, a lot less opportunity for swing trading. But as the markets go down and pop back up, we're going to see some more setups come up. And within the Platinum channel and in the Discord, we have a lot of participants now that are actually throwing out stocks for us to evaluate against our guidelines, and we do it. And we have a nice little banter going back and forth, and people are being successful learning how to do this and finding positions and trading. So it's nice on the Platinum channel, and it's nice. And I thank the people on those channels that are participating. So here we have basically the S&P 500, it's the SPX. And you can see since about the 20th of December, we're trading in this range with this box right here. And we're just going sideways. And, yesterday was Thursday, and you can see that we're down, and we're just falling up and down among the 9-day SMA. And so here's today. Okay, when we're up 600 points, we're still within this range. You can see the wick comes up and touches this box. And at some point, we're either going to go up or we're going to go down, but we're right on the 20-day SMA. We've got resistance here at the 50, and then we have a gap up here. You're going to have gap resistance here and gap fill resistance. Got the 200-day moving average up at the top. And of course, the long-term downward trend line or bear trend line. So there's a lot of resistance on the upside going up right now. Going down, we seem to be hitting right about 3780 is the bottom line resistance that we're not getting past. If we get past that, we might have a chance for continually going down on the S&P. Same thing here on the NASDAQ. Here's the NDX. You can see over the past several days, we're now trading around the 9-day simple moving average, but we're way under the 200-day. But we're just kind of trading sideways. And even with a big day with lots of volume, you can see here, we're still trading sideways, and we're right in the middle of our range. So it's tough to find swing trades when you're going sideways or down, but we have managed to find a few. And here you can see the Dow Jones, which has been trading above its 200-day simple moving average, but now you can see we're in a range of sideways trading. It's a little bit up. We're above, as we're trading today on Friday, above the 50 and the 20 and the 9-day simple moving average, but we're still in a sideways pattern at this point. So a lot of the trading that we're seeing, Drew, in the sideways pattern really comes off confusion with the Fed, I think. And the Fed came out, and we saw the FOMC meeting minutes from December, and people are still hoping or thinking that they're going to pivot. And I haven't seen anything that they're saying. They were all unanimous in saying that basically they don't see any cutting of the interest rate during 2023. And in fact, we'll take a look at what they said real quick. No participants anticipated that it would be appropriate to begin reducing the federal funds rate target in 2023. Participants generally observed that a restrictive policy stance would need to be maintained until the incoming data provided confidence that inflation was on a sustained downward path to 2%, which was likely to take some time. In view of the persistent and unacceptably high level of inflation, several participants commented that historical experience cautioned against prematurely loosening monetary policy. So I don't see, if you're hoping that that's going to happen, that's not what they're saying. Now, that doesn't mean it can't happen, but, we just seem to be trading on, the Fed on one side saying they're not going to loosen, and on the other side, people having hope that they're going to. And until that changes, we may be moving sideways for a while. So next week, we have the CPI data report, and we're going to see whether inflation in the core has gone up or gone down. And so, again, that'll be, I believe, on Thursday. We're going to see that. So we're going to see from Monday through Wednesday, everyone talking about the CPI data. And then we'll have consumer sentiment from the University of Michigan on Friday. So we're just going from report to report to report to report. And in between that, we're trying to do some swing trading, and we can go take a look at what we've been doing this week. I think a lot of people, Drew, need to understand that the Fed is serious, that they're not going to loosen. At least that's what they're saying. I think a lot of people, the saying is don't fight the Fed. And people are trying to fight the Fed. They didn't fight the Fed on the way up when interest rates were zero. And now they're trying to fight the Fed as they're raising interest rates, thinking that we're going to go back to the old days of buy the dip when we're not. The growth stocks have, without revenue coming in and earnings, are going to have a harder time finding funding for operations. And, their stock prices have gone down. So now, if they have offerings, their stock price is so low, who's going to want it, basically? So it's going to be tougher for them. They call it recency bias, that people get used to what happened recently. And over the pandemic, people got used to the markets going all the way up, and you buy the dip and they keep going up. Well, we're in a different world now, and you got to change your philosophy to match where we are today in reality. And where we are in reality is interest rates are going up. Interest rates are not going down for a while, and they're going to maintain higher interest rates until inflation gets down to their goal of 2%.
Right. So until then, you think the market will, have a downtrend, I guess.
Well, until I see differently, until we start trading on indices above the 200-day moving average or the 200-period moving average, we're going to continue to be in a bearish trend.
And do you see these layoffs coming out and even possibilities for bankruptcies in 2023?
Well, I think so. I think you're seeing Bed Bath & Beyond. Aren't they talking bankruptcy now? And as companies run out of money, they're going to have to lay people off to save on costs. I mean, you're even seeing, Amazon and Meta and bigger companies that actually have revenue laying off people to preserve capital when they have capital. So just think if you're a company that doesn't have any capital and you've been borrowing, based on increased revenues but no earnings, that's just going to slow down and pretty much stop, just like it did, in the dot-com era, just like it did, in any time the market turns down.
So then, based on your experience, where do you think we are, regarding the dot-com bubble? Do you think we're in the middle of it, or almost at the end of it, or what's your insight on that?
I think, just based on what's happening in the economy and the fact that, they started raising interest rates last March. And they were doing 25 and 50 basis points. Those rises in the interest rates are just about now hitting the economy. So we haven't even got the brunt of the 75 basis points that they did, 4 times in a row. And I think they're going to overshoot. And I think that at some point, the markets in 2023 are just going to be challenging, are going to be more of a stock pickers market. Whereas before the pandemic, when we had zero interest rates, you could pretty much just stick your money in an S&P 500 ETF and be guaranteed, 10 to 20% a year as the market went up. That's going to be harder to do. We're going to see a lot less ability for markets to go as an index that high, consistently again. So your ability to make the money that you made pre-pandemic and zero interest rates is going to be a lot tougher to do. And that's why we look at swing trading right now to help us if we can get 1% a day, or, if we got 1% a week, that's 52% upward motion for a year, So again, that's what we're trying to do with the swing trading course, because right now it's a stock picker's, market.
All right, so Mark, how about this week then? Did you see some great stocks that you traded or wanted to share?
Yeah, we looked at several different. We have a watch list that comes out, and what we're trying to do is we go out and we try to find setups for people to look at that would be good swing trading setups. And we had several this week, and it's not like we're trying to buy them, but we watch them. And with our guidelines, people have the choice of, utilizing their own experience and their own guidelines to either trade or not trade. And we do paper trades to learn how to do this. And this week we did a couple, and here's one. So this is CPRT, and you can see that we got into CPRT on a paper trade. You can see right now it's trading above its 200-day simple moving average, and it's trading above the 9-day simple moving average at the time. You've got a resistance line here, or a support line here, and a resistance line here. We got into the trade about here when it wicked down, and we got in at $61.61 in a paper trade. Of course, yesterday with the jobs report came out, you can see that we came down. We went below not only the 50-day moving average, but we went a little below the 9-day, but we didn't have a full candle close. That's in our guidelines. So we stayed in. We also didn't go below our support level or close below the support level, and we're still above the 200-day moving average. We also have come down, and now we've got a MACD cross, barely cross. We have a slow stochastic that is crossed and going positive. And then today you can see our RSI is above 50. So we remained in this for educational purposes. And today you can see we're now up above cost basis of 61.61, currently trading at 62.11. Now our goal is to stay above the 9, stay above the 200, and ride this up at least to a resistance line at 64.05. So that would give us three something. We can do that like we did back here, over $3 per share of gains on this trade. And we do it based by the signals, but we're using support lines and moving averages as our support and or resistance in making our trading decisions. So we're still in this one. We're hoping to get at least up to $64 on this one. So here we have Amgen. You can see Amgen has been trading. Here's its support. Here's its resistance. We're above the 200-day simple moving average, but we were trading below the 9-day. We also like to look for price action that's gone down and then starts to gain back up. You can see right here, we're starting to touch the 9-day simple moving average, which is acting as resistance until we got right here where we went above the 9-day simple moving average. Now, for me, when I see this like yesterday, I'll put in an order down at the bottom and see if it hits. And it did go down and hit my order. And then you can see we've used the 20-day simple moving average yesterday as resistance and the 9-day as support. Well, today with the market going up, we popped way over the 20. Now the 20 looks like support and the 50-day looks like resistance. So we've popped up quite a bit, $8.55 on this one. And we're looking to get up to the resistance level of 283 up here. We're currently at 275. So you can see again, we have a nice cross of the MACD over the signal line. We have a really good slow stochastic moving up, and you can see our RSI took off to about 60 now. So this is a very good looking chart for us. And once we get up, we'll start looking at, you can see resistance around that resistance line where it just goes sideways. We may take a part of our position off at this point and see if we can get above it, but we will use stop losses now below this point to save our gains and protect from big losses. This one is IPG, Interpublic Group companies. And this one actually came from one of our subscribers who said, hey, can you look at this chart for me? And I'm like, wow, this is an awesome chart. You can see we have a crossover of the MACD and the signal line. We have a nice slow stochastic with a crossover, and we've got a nice rising RSI here at about 70. And you can see, I know that this subscriber actually got in it. And at the point where we were talking, I said, you have over 3% of an upside till we hit resistance. You can see he's had a nice little gain here. We'll see what he does when you hit resistance. So we get into the Discord of the Platinum channel. We talk about this. People bring up ideas. They run it by us. We say, well, this is what we think. And it's up to the individual subscriber. And we're seeing some success by some really good people that are participating in this process. So congratulations on IPG. This is a good one. It still has a little more room to run up for him. Now, here's another one we were looking at. It's Visa. Let me remove this. So Visa came up, and at this point, I said, Visa is too close to resistance for me. I just don't see a reward on this one at this point. But yesterday you can see we had a down day. It came up and it hit the resistance line. And just being an experienced person, you might have wanted to put, because we're still above the 200, we're still above the 50, the 20, and the 9. Put in a buy order down below this, and had you hit at the buy here, you can see the amount of money today that we went, and now we're actually above the resistance line. We still have positive indicators with the MACD, the slow stochastic, and now our RSI, is at 63. So that would have been a good trade also. So this was on our watch list also. But we do watch these resistance lines. And I would expect we want to see if this can break out a little further over resistance, or are we going to pop back down before the day's over? We'll see.
So wow, Mark, thank you as always. Again, no matter how the market goes, if it goes up, if it goes down, I think with string trades and looking at the charts, there's always an opportunity. And I think that, with this platinum membership, I think more members are learning and also contributing and like sharing their ideas. So it's really helpful for the whole community. So again, thank you very much for sharing, your insights, your trades, your efforts. And I'm pretty sure that the people who are listening to this episode also learned a lot as well. So for more details and updates regarding swing trades and chart analysis each day, make sure you join our Platinum group and let's successfully invest and make it through this tough market together. Thank you very much and see you all next week.